it's going to take a bit of a different angle from all other discussions that have been had up to now in this room. Because everybody talks about lean, about efficiencies, about hangars, about line maintenance. No one talks about money, cash. Actually, when we started at Magnetic MRO, we realized that we cannot avoid the topic. And the reason for that is, if you look at what Oliver Wyman has been showing this morning and yesterday with ICF, there's interesting peculiarity about the slide. And 64% of all the revenue, global revenue of $82 billion of MRO spend, it's related to capital-intensive businesses. It's not labor-intensive, it's capital-intensive. In BEER region, we talk about hangars and line maintenance because that's labor-intensive, because this is how we were set up in our brains, in our DNA. We were set up as cheap C-check facilities. And we continue, many of us continue to be in that position. Many of us keep focusing on lean, keep focusing on something else, and keep trying to find the way how to differentiate just through being the cheap C-check facility. So if we talk about the key differentiators, how you could differentiate, forgetting where we are, but how it could be. One way it could be that, okay, we continue to be the low labor cost zone. Unfortunately, if you look at the last 15 years and the average salaries in Eastern Europe, compared to, let's say, EU average, the rate has been growing up and now we're nearly 75%. We started at about 30%. I mean, this difference is deteriorating and it's not sustainable. Another way to differentiate is OEM alignment. So of course, but we have some Boeing Gold here, we have this, we have Airbus, approved service centers. However, there's not a lot of money in that. Third potential way is a captive airline, and I really envy a lot Polish MRO, which always has a lot Polish airline. Probably that's the only example in this region which has a comfort like that. FL Technics, Magnetic MRO, Line Tech, none of us have a base loading airline. So what we found at Magnetic, actually, this is based on our experience, that access to capital is another way to differentiate ourselves. So, because 64% of the total business that we do, it is capital intensive. What it means, if you want to play in the engines, you need to have engines on lease. You need to have engines for exchanges. You need to have engines for repairs. You need to invest into LLP spare parts. If you want to be in the components, it's about component pools. It's about aircraft teardowns. It's about actually buying packages, selling packages. It's about serious money, guys. So 4 years ago in Magnetic, when we started this journey, I said to our private equity partners, we need access to capital. We really need access to serious capital if we are to do it seriously. And this is a bit of our story, how we actually did that. And maybe some of the learnings can be shared with our industry partners, because it's really hard to be alone out there trying to prove that the region actually has brains to invest the capital. So I hope that some of you follow the same story, and then there's a cluster of that. So where do you look for capital? First of all, I can share with you, I was supposed to be here on this stage with 2 or 3 other people. I contacted the CEOs of 3 local banks and saying, look, there's aviation industry event, why don't you send someone and let's talk about financing MROs in the industry. It's the top 3 banks all said they have other priorities. And this is a great reflection of where we are in this region. We have false prophets. We think we have capital in the markets, we think we have banks, but in reality there's an issue. The issue is, first of all, with the banks, the brains geography. I don't know about Poland or Czech Republic, for example, but at least in the Baltics, main brains of the banks sit in Scandinavia. Scandinavia is not an aviation market. Forget that. Have you seen MRO, functioning MRO in Scandinavia? I haven't. So if you start with that and you ask the Scandinavian bank to finance MRO development, of course, typically the response is corporate policy, no ships, no planes. Simply. The bank says, I don't even want to talk to you. No ships, no planes. That's a corporate policy. And that decision is made, it's not even in the region, it's made somewhere else. UK, Italy, Scandinavia, somewhere not in the region. There's no one to talk to. Simply. People who run the local banks, they report to someone else. Then we have know-how. Actually, banks do not have aviation know-how in the region. You cannot even start a conversation. They know real estate, they know something else, they don't know aviation. And explaining how I'm gonna buy an aircraft, tear it down, monetize the value, it's impossible to even start a conversation. So that's another problem. And willingness. I mean, because the economies are now booming, banks have where to put the money, like real estate, some, I don't know, production financing. They don't even want to talk to you. It's easier not to talk to you. You know, so they go the easier way. Then there are these funds, private individuals, investment funds, and so on. The problem with them, again, similar to the banks' track record. I mean, no one has actually done aviation investment in this region. No one. I mean, there is no, I guess, fund manager who is sitting on $100 million who have done aircraft investments. They do not exist here. So now trying to educate them is extremely time-consuming. The speed of learning is very slow, and I did this mistake trying to actually educate Skype office. There's an office in Estonia which manages the selling of Skype proceeds by Estonian owners, and they invest in all the types of assets. Unfortunately, we spent half a year trying to persuade them how aviation works, and it never got off the ground. It's just too complicated, trying to explain to the person how it works. But the good news, I mean, there are real sources, and they're global. So the centers, the clusters of aviation, US, UK, Asia, by Asia, I mean, Korea, Korean cash, Japanese cash, Chinese cash. I mean, this is where the cash is. The cash which invests into aviation. And if you want to access that cash, you need to go there. So types of cash available, equity, funds, debt financing from the banks, and so on and so on. So I mean, there are people who are doing it on a daily basis, just not here. Unfortunately, you walk in the street, they don't do it here. But this is where we are. So what we realized that we cannot waste time trying to persuade the local banks. It's just important. No point to talk about that. We need a few $100 million. And what are we going to buy? We're going to buy an aircraft which costs more than this whole building. You know, and people, whoa, how does that work? You know, and they don't even want to talk to you. So if you decide on the right targets, that you don't source for capital here, but you need to go somewhere else. I mean, we went to United Kingdom. We decided that there were certain reasons why we did that. I'm going to explain. So preparation, roadshow, project execution, growth. Let me just walk you through the first one. First of all, from Magnetics experience, create your story. I mean, what do you need cash for? Really? I mean, well, what are you going to do with that cash? Because, I mean, I want, like, you know, like all these startups, you know, I will like creating, you know, ICO with some virtual money and sitting in the office and, you know, smoking cigarettes and thinking, like the goal in itself is actually to raise cash. No, in this case, it's not a startup. Aviation asset financing means you need to sell a story how you're going to create money out of these assets. So in our case, we were selling the story that, look, we have MRO infrastructure. It really helps to invest into components, into transition of C-checks between one airline and another. We can tear down an engine, we can sell the parts, we have infrastructure for part selling. We have an engineering brains, and you know, if the aircraft is on lease, we can manage the lease. So this is how we're going to create the value. And we want to target end-of-life assets, narrow body, 737s, A320s, and we want to actually $300 million. And why? Well, we were the small MRO in Estonia, and we want $300 million. That was the story. So you can imagine the first reactions that we got. Then the second question, document your, if you are to go on this trade, document your track story. The question, I mean, what we did in Magnetic, we actually did a few transactions, actually more than 20 of them. We bought, we sold engines. We actually bought component packages. We sold them to the market. We actually, and then the potential investors started asking, so can you prove the track record? Can you somehow show that it does exist? It's not that you created it on a PowerPoint. So what we did, we actually started documenting every deal. And you know, what we did, how much return we generated, and so on. Because if you were to raised capital, keep in mind this will be needed. So start doing it on your own balance sheet, small items, and the story, the angle is, let's scale it up. We've been doing it with $5 million, now I want to do it with $100 million. Third point, form the dream team. Capital is invested into people. I mean, 2-3 people, faces, if they commit, I mean, this is the faces the investors will want to see for the next 5 years. So until the returns are delivered. So in our case, we created a team, and I was one of the kind of people on the roadshow showing the face saying, I'm gonna do that. I'm gonna do that, and here are 5 more people who are gonna do that full time. So that needs to be there. And hire A-tier advisors. I cannot underscore how much important it is. I mean, you can try to do it yourself in a way that, okay, I create a PowerPoint, I want to invest into aviation assets, and I go to London and walk through the offices and saying, guys, give me $300 million. You're not gonna achieve the result. A better way is actually to find someone who does it for you. And in our case, we found some good partners, KPMG UK, who are very experienced in capital raising. And the good thing about these guys was I had to sell to them first before they decided, they accepted that they will take us and go to the market. So if you sell to KPMG UK, if you sell to Supervisory, if you sell to someone else, some other quality advisor, half of your job is done. It means people who have the brains, they realize there's a potential. And they take it personal to take you to the market. So don't just, there are always these proposals from these advisors in Estonia or Lithuania, I'm gonna find you cash. No. Go with tier A. Go with serious guys who have access to serious network, and they open serious doors. So, and by actually brainstorming together with them, you even fine-tune your own story, what you're actually selling. So, yes, the first fundraising never happens by accident. I mean, believe me. Roadshow. So let's say you created your story, you hired the advisors, then what happens? Then actually, first of all, you sharpen your story with the advisors, which I already explained actually. We spent a lot of time with KPMG because we thought we're selling this thing. And they're saying, no, guys, the investors will want to see this thing. So change your PowerPoints, we will help you, and let us package you. You will be the product that we take to the investors. Mini IPO process, treat it as mini IPO process. Focus, go there, quality material, quality people, quality meetings, quality follow-ups. You have one chance, really one chance to get into the door and get out. And believe me, now I get some presentations from some MROs in Eastern Europe, which end up somewhere on the table of investors in London, and they shoot them to me saying, Jonas, what do you think about that? And believe me, some of those presentations look very unprofessional. So don't do that, don't even start. If you cannot do it professionally, don't even start. Let advisors guide you. So, I mean, we were fully in the hands of KPMG, who said, look, go to these people, don't go to these people. These people invest into aviation, these people is like a perimeter investment for them. They're not gonna listen to you. So we had meetings. We had meetings set up by them with Goldman Sachs, Blackstones. I mean, books are written on these guys. So I was sitting in the office and talking about, we're from Estonia, we want 300 million, please give me the cash. So it sounded a bit strange, but I know there was no way to be in that room unless there was a KPMG who opened the doors. I mean, no one would have ever listened to me. So that's how we did. And plan A and plan B. I mean, you always have the best outcome. At the same time, please accept that maybe the outcome will not be ideal. I mean, maybe you will be given certain cash, but not the way you actually wanted it. So, but please be open to that. And keep in mind, if you fail once, like you go through all the 50 investors, everybody says, next time you can do that will be 3 years, 5 years from now. So pretty much your strategy is stuck for the next 3 years. So you have one shot. So make sure you do it properly. Project execution. Okay, we got lucky. We got an investor. It's called Crestline Investors, Texas-based $10 billion friendly capital. which said, okay, we trust this strange Estonian company and let's form a joint venture and we will start putting cash into this joint venture for aviation assets. This is what happened in our case. But actually what happened, we said, look, we want $300 million. They said, yeah, fine, nice, but let's start with 40. Let's see what you can do with 40. In a way, like the guys, the investors are looking how to scale up to even $1 billion, but they always will start with drip feeding capital to you. Let's start with 30, let's start with 40, let's start with 100, and see where you get. And then it will become growing and growing and growing. Execution, execution, execution. In our case, we invested the first 40 million raised capital in the first 12 months, and we generated returns which exceeded everyone's expectations. And why? Because I was really personally paranoid of getting cash. I mean, I didn't want to take that cash until we knew exactly which projects it will go into. Because cash is a liability. No one gives it to you just for the sake of giving it to you. They give for the return. You're not a startup. You're not allowed to fail. It's an asset-based deal. Assets do not fail. Startups fail. So if you take that cash, make sure you do not fail. Because the guys who gave you the cash, they also expect the returns. So execution is the key. And I call it the soft limit of 24 months. Actually, this is when you're at the crossroads. If you didn't perform, yeah, okay, off the table. Failure, sold out, move on. If you performed, this is when the growth path starts. Actually, and believe me, I have seen people in our industry who have raised cash, same time like we did at Magnetic, and who are at the crossroads in a negative way. They could not actually invest the cash, they could not generate the returns, and the investors are now closing it down 24 months later. In our case, we're lucky that we actually focused on execution, and that's not the case. So if I go to the growth, so the next phase is actually, if you deliver within the 24 months with a drip feeding of initial capital, that's it, you're in the driver's seat. And you know what happens? It's a strange thing happens. All these people you met when you were initially fundraising, they start approaching you. Oh, we heard you're doing these great things. Do you need more cash? No. Where were you guys when we started that? And the same guys with whom you already have a JV, they say, look, let's just keep on pushing the cash into the system because they have a pressure to invest as much of capital as possible. So actually you become in the driver's seat to choose. And this is extreme, it's just completely different dynamics. The first 10 million is the most complicated. After you prove that you're doing the right things, the next 100 million becomes easy. Actually, where we sit right now, like yesterday, we sent out a project bid together with Pressline investors at $235 million. So we already, if I have a $500 million bid, I will probably call Pressline, and it's a one phone call. And we can get into $500 million project if needed. So this is where you get if you actually work through the first 24 months. But getting that first investment up front is extremely complicated. And you have to be very, very well prepared. So the capital follows a track record and the execution. Believe me, there are billions of dollars out there in the world waiting to invest into components, engines, component pool PBH programs, wheels and brakes, everything that is very kind of related to MRO services, but it's like a blended solution always. There's billions of dollars. The problem is they don't see us, we don't see them. And somehow we need to bridge that gap. And actually that gap can be bridged with the track record and execution. And if you look at the Magnetic strategic position, what we have achieved over the last 24 months by doing this. So before capital access, we were standard BEER MRO. Žilvinas was talking about lean. Look, I do not see lean as being a competitive differentiator. Lean is a basic. You have accounting system, you have lean. You don't compete with lean. So we were labor company. We were standard hangar plus line maintenance plus engineering and that's it. I remember when the frustration started, there was a Thomas Cook wheels and brakes deal. Thomas Cook was issuing RFQ. Part of RFQ had two parts. One part was wheels and brakes repair. Okay, fine, I mean, we can do that, not a question, we're MRO. Another part of the RFQ was, you have to buy out the whole stock of wheels and brakes from Thomas Cook and lease it back to them. And the value of that stock was $15 million. And these rates are like 15% annual. You know, I mean, if you don't do that, you don't do that. Most of the MROs in the region would say, we want to take the wheels and brakes repair, but we don't want to take the leaseback part. At that 2 years ago, we were in the same position, and it really, really frustrated me. Now, today, it's a different story. I mean, we're talking even about bigger deals like that, and we can initiate conversations like that with the airlines. Guys, look, you have these spare parts. Why don't we talk about power by the hour, but we will take all the stock off your hands, put it back into the no-go items, lease it here, lease there, and you blend financial services together with MRO services. Because you know what, we did not create that game. It's Lufthansa, AAR, KLM Air France Engineering, GA Telesis, these are the guys who created the game. We just want to be in the game. I don't want to be the cheap C-check facility. You know, there's no fun there. So before we were cheap C-checks, now actually we can blend the financial and the MRO services. We can exercise the muscle of financial strength and say, okay, let's talk about an aircraft. Let's talk about this engine. And by the way, we will take the repair of this engine, but we have a leased engine that we will put on your wing. And it's our engine. We decide where it goes, not some sub-leased engine and stuff like that. It creates a different level of conversation with the airlines, believe me. So it has empowered us to actually outgrow the brain of the region, the DNA of the region being C-check facility, and actually have a really proper conversation at the table in the United Kingdom, in Germany, and somewhere else with large airlines about total care solutions. And yes, we started winning the first DBH contracts, we started actually doing lots of asset deals, and I can bluntly say to you, last year, 2018, Magnetic made more money, more profit in asset-related deals with these financial investments than in typical MRO projects like C-checks, line maintenance, and so on. We actually, if those asset deals were not there, we would be 50% of our profit. In fact, 40%. Asset deals really added up to all the fuel to the fire, actually, of our activities. So, in summary, access to global capital, I mean, I see that as I kind of, people, do you need it? I mean, it's a necessity. It's a survival instinct. If you don't have cash, you're not in the game. Simply, I mean, guys, and cash is not here. Don't chase the banks. They hate you. They don't want you. They are not here on this stage. They said they're not interested in innovation. So don't even go here. If you go to where you want to go, to let's say Korea, China, UK, US, then actually prepare. Get the right advisors, treat it as IPO process, and then just go through the very, very quality process actually in fundraising. Execute is highlighted here. It's always about execution. Why we got cash? Because people believe that we can actually convert it into even more cash by using all the MRO infrastructure behind us. And we're doing that on a daily basis. So, and yes, the cash is growing. So, first of all, dream big. I mean, I see some MROs here who they don't dare to dream big. They dream about being more efficient in this bay. No, guys, let's go and take Lufthansa's, let's go and do KLM Air France's. I mean, let's go to Asia, let's go to US. I mean, let's just, get some fun on the way. So, scale up. I mean, once you access capital, $500 million is not a limiter. So it's a matter of just, remove your ceiling in your own brains and you can even get access to $1 billion as long as you invest it smartly. It's not an issue. I mean, capital exists everywhere. Everywhere where you look around. And go global. I mean, yeah, capital is not here. And even opportunities in the right MROs, which are blended with capital and MRO services, they are not here as well. They are somewhere else. So if you have ambition, get out of the region. Go after cash, go after customers, go after people. Because guess what? If you have good capital, good people follow because they're expensive. But if you have $500 million to play with, you can pay a salary of 300,000 euros. It's not an issue. You know, so it kind of it all. Then you add brain to the team, and that brain is a global brain. So that's it. I really want you guys to just, I guess, join us because it's very lonely in London, in New York, and somewhere else when you go talk to these investors and say, where is Eastern Europe? Why are you here? And you know, I want more people with more track record, more success stories, so that, I mean, we don't start the conversation here, we start here. Oh yeah, you see FL Technics have done that, and they are working with this fund in the US. Oh good, okay, fine, so there's an example. Now you can use us as an example. We're working with Pressline investors and it's very good. Now I hope that there will be 5, 10 more examples and we all create certain cluster that good things can happen here. So that's the purpose of this presentation. So I hope it puts some thinking in the brain and happy to take some questions. Questions from the back.
Yes, not a question, some comments. So, Jonas, he's a very lucky guy because when he joined the Magnetic MRO, the company was 2 times more efficient than FL Technics on that time. That's why I had to focus on lean. And I agree completely with you talking about the capital. You know, I can tell you that I think in maybe 2-3 weeks, maybe 1 month, you will not be alone in UK because we are finalizing the deal with one bank. We're going to get first 30 million and starting doing the same things you do. But you know, as you said, that you have to be ready for this. You have to know what you're gonna do with the cash. You have to have some track record. You have to have team, all those things, and it takes time. You know, so the companies were in different situations, different positions, and now I think that we are going the same direction. And you know, both sides are very important. Efficient processes, lean in a hangar is very, very important because it's the part of your investment. Because you can do the engine change, you know, in 2 weeks, or you can do in 1.5 days. So it's also important. And of course, the access to capital, it's serious, but serious question, serious mind. So thank you.
We're glad to hear that we will not be alone. And as I said, look, I really encourage Line Tech, Lot Polish, other guys to do the same because it opens up opportunities. And you know, I mean, generally aviation is like a cluster anyway, it's a network, you know, so we want to develop this cluster in Eastern Europe so the network continues to develop, and there's some good stories, there's some success stories.
Any other questions?
Yes. Usually questions are from the back, but
how has your ability to find new funds and investments changed from your Chinese investor?
It's a very good question. So, has it changed with our Chinese ownership? Theoretically, yes. Practically, no, if that's the right answer. Theoretically, of course, look, there's China, and there's lots of cash there and so on. Practically, for China, we're too small. You know, so in a way, we have this green light from our Chinese new owners saying, look, just continue what you're doing. And you know what? At certain angle, US capital has a flavor, which is a positive flavor. So it's like a marketing tool. So us having US investors, in a way, no offense to China or Russia or anything, you know, I mean, it's better than us having Chinese or Russian investors, or cash has a flavor. So our Chinese owners, they realize that eventually, looking 5 years down the track, it would be better to see this business, continue seeding this business with US capital versus capital coming from the East. And I fully agree with that. At least at this stage, this is where we are. But I think at certain stage there will be further discussions there.
Hi, Jonas. Thank you for presentation, really good. Just a question, if you are approaching investment, huge investments, what is the return that the funds are expecting from you to deliver?
It's, okay, I mean, depends on what type of assets you're targeting. Of course, we decided consciously not to go into new aircrafts, because in new aircrafts, it's a cost of capital game. Our angle is we buy complicated stuff and we monetize complicated stuff. Why? Because we have a technical infrastructure behind us. That's the angle. So it's by default, it's end-of-life assets, and end-of-life assets have higher risk and higher return expectations. So I would say any typical project we get into, it has at least 15% IRR. We have delivered, in certain cases, above 20. So and I think we will sustain that delivery. And if you look at banks are financing some, you know, real estate projects at 2% here, and you can get 12, 15%, up to 20%, I still do not understand why banks behave the way they behave here, and they don't even want to get involved in this industry, but it's a choice. Great returns to be had. Yes, Thomas.
What was the rationale about your recent acquisition of direct maintenance? Because obviously that's line maintenance, which is very labour intensive and kind of points against your investment pitch that you said.
Sorry, there's the Australian question? Or
No, direct.
Direct maintenance, okay, so it's not good, okay. Look, I mean, it's a good question. Geographical types of aircrafts, and you know, like we have these asset-intensive businesses like components and engines, but that does not mean that our labor-intensive business has to stop. So we continue to develop both. It's just simply that the synergies between the two are bigger and bigger and bigger. And let's say, as an example, if we want to get into engine on wing services, it's done on wing in the locations where your people actually work. You know, and the more stations you have, the more potential on-wing solutions you could offer geographically to, let's say, OEM like Rolls-Royce or GE or Pratt & Whitney. At the same time, if you add to that certain pool of engine leases that you have, that creates a very interesting mix of services. So we need geographical locations. And yes, we still make money in direct maintenance. It's a very profitable and fantastic business. We like it. So same like Storm Aviation.
Okay, great. Thank you very much, Jonas.
Thank you.